emission peak by 2030 and carbon neutrality by 2060 are widely discussed in China and even globally nowadays. The concepts of sustainability, low carbon emissions, and going green will be the key for the future of our planet. This goal also created lots of opportunities in ESG investments. Today, we would like to talk about ESG integration and low-carbon or climate-resilient investments. Leyang, could you please tell us more about that?
Unlike the traditional investment concept, which relies on company's evaluation and financial performance, ESG requires more information about the company performance in promoting sustainable economic development and coping with non-financial risk. In recent years, an increasing number of investors have realized that those evaluation criteria that are indirectly linked to business performance implies the robustness of long-term business operations and potential growth of companies. At the same time, ESG factors also form part of the reference for revealing the possible future risks of companies. They are therefore becoming an important part of fundamental analysis for long-term investment. According to China's self-statistics, the total China domiciled mutual funds AUM integrating ESG investment criteria reached 120 billion RMB in 2020, which shows that the exercise in these categories has doubled in the past 5 years. Furthermore, ESG investments and low-carbon or climate-resilient investments have gradually become some of the main concerns for asset managers in China, since the important strategic goals of carbon emissions peak by 2030 and carbon neutrality by 2060 were being heavily promoted by the central government in China.
What is the practice in terms of integrating ESG or climate risk concepts into investment decision-making in HSZ China Fund?
Checking whether the company is compliant in substance with ESG requirements is an integral part of the evaluation of the industries in the stock selection process for HSZ China Fund. We at HSZ believe that impacting ESG factors into the entire investment decision-making and management processes can enhance the investment return and provide a driving force for the sustainable development of our investee companies. As a signatory of UNPRI, HSZ employs a broad-based approach to assess ESG information, as well as relevant industry, thematic, and micro-sustainability considerations. HSZ's ESG due diligence is determined by factors like sector, activity, geographic location, and track record. HSZ reviews ESG risks and opportunities alongside the traditional investment risks on a regular basis. For low-carbon or climate-resilient investment, the HSZ China Fund has already reached net zero emissions several years ago and has achieved overall carbon reduction. The weighted average carbon intensity of the HSZ China Fund remains negative in the past 3 years. The reason behind this outstanding achievement is on the one hand that the HSZ China Fund has tried to avoid investing in companies with high carbon emission intensity, and on the other hand, has invested in companies which generate renewable energy. HSZ will continue to explore different investment opportunities in low-carbon or climate-resilient industries.
That's it for today. Thank you for watching and hope to see you again in the next episode.